Good afternoon.
The pieces are still off, but I can fix them.
Okay, you fix them. So, at this time of the day, my hubs is at work, so it's just me and the kids, so it's going to be another fun time today. Hi, Janelle.
The one last piece.
Okay, put it back on. So, hopefully, we don't have too many interruptions from the littles, but we shall see.
One last piece is off.
So far, we're not starting at a great rate. Okay, honey, thank you. I'm just gonna wait a little bit. So very first, I guess, before I get started on the tax stuff, I wanted to talk really quickly about charging the sales tax. I was talking to a lady the other day, and she was talking about why she does not charge the tax. She said she feels like even though the company charges us the tax, if you get the product at 40 or 50% off, you're still making a profit off of that. So I wanted to talk to you a little bit about that. I charge tax because the company charges us a tax, and I've never had a customer complain about having to pay the sales tax on a product. And I think it's a really good way to get some of your money back, because when you get onto PayPal or Square and they're paying that way, you're getting charged that processing fee. And so, and usually that sales tax covers the processing fee that they take out of that thing. So instead of paying fees on top of fees on top of fees and having all that money come out of your business and out of your pocket right out the gate.
I cut my fingernail.
Oh, wow. Okay. You're all right. I don't know. I guess I feel like it's better to charge like a sales tax instead of a processing fee. But I don't know. I do it. I do it, and I encourage you to do it as a way to get some of that money back. But you have to do what you feel like you have to do for your business, just like anything else. And all the advice that I give you, you just do what you want with your business. Sorry, I'm going to turn that off really quick so it's not as loud during our video. Okay, so let's talk taxes. Who's excited? Very first, I'm going to start this video by just noting I'm not an accountant. I'm a mom. I went to school to be a teacher. I'm now a businesswoman, but I'm not an accountant. Okay? All of this information that I have, I've learned during my time as a distributor. But when it comes time to do taxes, it's better for you to talk to an accountant or use some kind of like a system like QuickBooks or TurboTax or something to help you out. Because I can tell you what I know, but as far as filing taxes in your state with your business and your income, that's going to be, I can't do it for you kind of a thing. So these are just like my tips and the information that I have, and hopefully it will help you in your business. Okay, so in our business, there are two different ways that I did this. There are two different ways that you can make income. Through sales revenue and through downline commission. Okay, so let's talk about that just really quick. I'm going to talk about the sales revenue and then I'll talk about the downline. I talked about the sales revenue a little bit in our new distributor video. Hi, Chelsea. I didn't even see that you got on here. When you make a sale, you need to keep record of that sale. And I know that we talked about before that PayPal or Square, whatever you use, will do that for you to a certain extent. Sorry, I'm moving this around, this stuff. They'll do it for you, but some of your sales might be in cash or check or, I don't know. Maybe maybe cash or check is usually, if it's not through PayPal, it's usually cash or check if you trust someone to give you a check. So I like to have an Excel spreadsheet to keep all my sales in one place. So my PayPal and my cash transactions are all in the same place. So I know exactly what I made, and it's broken down for me just the way I want it to be. And I actually uploaded my income spreadsheet that I use and my expenses spreadsheet that I use onto the group page, onto the Callistus and Assistus page. So that's there for you if you want to use it, or you can come up with your own way of doing it. It's completely up to you. That's just what I have. But you do need to keep good records of your sales, because when it comes time to do taxes, they're going to ask you your total sales revenue. They're going to ask you about it. And if you've kept track of it through all this time since you started to become a distributor, you can just get on, you can look at your monthly sheets that you have, and you can total up those numbers and put it in the little box. Or you can take in those spreadsheets and you can hand it to your accountant, and it will take 2 minutes instead of 20,000 hours of going through receipts and going through your business account and trying to figure everything out. It's just there. It's all there for you, and it takes just like an hour a week, honestly. Like, it never takes much time, it never takes a lot of time to just keep up with it and put it all together. But you will want that. You will want to keep track of that. As far as your downline commission goes, that will be much easier because the company actually keeps track of that for us, which is lucky. So if you make more than $600 in commission in the year, they will send you a form called a 1099. And when you go to do your taxes, it'll just ask you if you got a 1099, and you'll say yes, and then you'll put in the amount that it has on your 1099, and that'll be it. It doesn't take a lot of work as far as that goes, but it will only include the amount that you received during the year. So your team's sales that they did in December will not be on that 1099, because you won't actually get paid for that commission until January, because they add it all up, and then you get paid on the 15th of the next month. So you will only have on your 1099 the money you receive between January 1st and December 31st of that year, which is kind of good, but it'll only have that money you receive during the year. And then they will also send you one of those if you have more than $5,000 in product that you've ordered from the company. And the reason that they do that is because it's a really good way for the IRS, I guess, to keep track of what you've ordered, so they have an idea of what you should be reporting as far as your income and sales goes. So it's a really good a really good way to keep people honest. So that's why even if you don't do $600 in commission, if you've ordered more than $5,000 in product, they'll still send you a 1099 that you'll need for your taxes. But it's really easy stuff because they do all that work for you, so you don't even have to worry about it. Okay, the next part I wanted to talk about is expenses. Okay, expenses are crucial. I wish I could just even say this so many times. Expenses are a crucial thing that you have to keep track of during the year. It will save you a lot of money if you keep track of your expenses that you put into your business. Like a lot. And it's also why we keep our business and our personal checking account separate. Like I talked about with the new distributor video that I did last week. You want to keep it separate so that you just have it. You can just get on, you look at it, you put it in your spreadsheet if you want, or however you want to do it. And that will, but having it separate will keeping track of those expenses 10 times easier. Like, instead of having to go through everything from your family and trying to pick out stuff from your business, it'll just be completely separate and on its own, and it will save you a lot of time and money, honestly. But you need to keep really good records of your expenses, because this is where all your tax deductions will come in. This is where you will save money. But when you go and you buy something for your business, you will want to keep your receipt, just in case they audit you. It doesn't happen often. I don't know anyone in the company that has been audited, but you need to keep your receipts, because if they do come back and audit you, you will want paper proof of what you bought during that transaction and be able to say, look, this was for my business. But if you were to just keep all your receipts and then take in a box of receipts into your accountant and drop it on their desk, they're going to give you a nasty look, and they're probably not going to be very nice to you, because that's your job. As the business owner, it's your job to keep track of your expenses and have it in some kind of easy form for your accountant to just look at and call it a win. I do have that separate Excel sheet that I use for my expenses, which is also on the page like I talked about. But I think I'm going to get on and edit it. I'm getting into this place where I just want to like keep it simple. You know that like keep it simple, stupid kind of thing. And I have a lot more columns on there than I really need. So you could just have an Excel spreadsheet that has, you know, the products you buy, the giveaways, the supplies, your shipping, and then like a miscellaneous for anything extra. And that should cover all of your bases. Like you don't need to have a million columns. And I feel like I have a million columns. Because I have one for party supplies and one for this and one for that. But you don't really need that. That's just how I set it up when I very first started. You don't need to have all of those different kind of columns. You can just kind of do what works for you, and it should be enough. But your expenses, like I said, are where all your tax deductible things come in. A deductible has to be ordinary and necessary for it to count. Tax deductions are kind of a gray area because you can ask one person, is this a tax deductible expense? And they will say no. And you can ask another person, is this a tax deductible expense? And they will say yes. Because it's just kind of based on how they interpret it and what's going on. But a good rule of thumb is that if it benefits you more than it benefits your business, it is not tax deductible. So if you are going to seminar and you go out and you buy a really nice dress for the formal night, and then you wear that dress out to dinner with your hubs, like you could wear that out to dinner or wear it to church or whatever, then that is not a tax deductible expense. But if you go and you buy a t-shirt or you get a t-shirt made that's got lips on it and your business name, and it's to promote your business and your company, then that is a tax deductible expense. So I hope that helps you to kind of understand what would be and what would not be tax deductible. It is a gray area, but if you were by chance to get audited and they noticed that you had claimed all these deductions that were not legitimate, then you would be in a lot of trouble. So it's better to just kind of stick to that like rule of thumb where if it benefits you more than it benefits your business, then it's not tax deductible. But there are so many things that are tax deductible. I have them in my notebook here. I have just a list of all the things that are tax deductible, and I'm going to talk to you about the ones that I think are most applicable. But there are so many that if I talk about them all, we would be here for 100 years. So I think what I'm going to do today or tomorrow, I'm going to type up a list of all the things that I have that are tax deductible, and I'll put them on the files tab on our group page, and then you can get on and have that for whatever, for if you need it, to have a list of your tax deductible expenses. But I'm just going to go through the ones that I have here in my notebook, just the big ones. Medical expenses. This one was really exciting to me. Medical expenses can be tax deductible. If you spend more than 10% of your business's income. Jonathan Thomas, can you stop yelling, please? If you spend more than 10% of your business income on medical expenses throughout the year, then it's tax deductible. That includes paying for insurance, your co-pays, anything you pay to the doctor for just a regular visit or a surgery or going to physical therapy or going to the chiropractor. All of those things are covered under medical expenses. And if you spend more than 10% of your income on medical expenses, it's all tax deductible, which is amazing. That can be a really amazing benefit for your family. I know it is for mine. I'm pumped about that part. Anything you pay for tax preparation fees is tax deductible. So you pay for an accountant, or if you pay for QuickBooks, or if you pay for TurboTax, whatever it might be, that's a tax deductible expense. And accountants, we'll talk about that a little bit later. Anything you pay for advertising, business cards, packaging for what you send in the mail, a t-shirt that you buy that has your business name on it or just has a pair of lips on it, or whatever it might be. If it's advertising for your business, it's tax deductible. All your product is tax deductible. Once you start getting a team, you're going to want to do like rank gifts, incentives. If you do like hostess gifts at your parties or anything you buy for your demo supplies for your parties, that's all tax deductible. If you put any kind of money away for a retirement plan, that is tax deductible. If you go to, oh no, I can't even remember of the place. If you go somewhere and they set you up with a retirement plan and a retirement schedule, that's all tax deductible expenses. If you get to a place in your business, which if you do, I'm real proud of you. If you get to a place in your business where you need an assistant, that's tax deductible. If you do actually, just like if we get more than $600 in commission from the company, they have to send us a 1099. If you hire an assistant and give them more than $600 in the year, then you have to prepare tax documents for them. But anything below that $600 is a tax deductible expense. Home office. This is very exciting because all the things start to get deductible if you have a home office. If you have, but for it to count, you have to have a separate room that is used for business only. It's specifically for work. They can't, like if someone was to come to your home and walk into your office, it must be very obvious that that is for your work. You can't have like a box of toys in the corner that your kids come in and play with while you're working. It has to be just for business. They walk in and it's your office. If you have that, then all the things get tax deductible. Your utilities, a portion of your rent or your mortgage is tax deductible. Your internet is tax deductible. Your home insurance is tax deductible. Any furnishings you bought for that office are tax deductible. Computers, printers, any backdrops that you buy, any ring lights, mirrors, cameras that you use to take selfies or pictures of yourself for work. Those are all tax deductible expenses. You guys, like, all the tax deductions happen. Your cell phone is tax deductible. Your portion of the cell phone bill is tax deductible because, let's get real, we use our cell phones for work. Whether it's we're on Facebook, whether we're Facebook messaging, whether we're calling people, sending emails, or whatever it might be. A good portion of our business we're doing from our phones. So our cell phones are tax deductible. If you have a home phone, that's tax deductible, as long as you have one in your office. Your business use of your car is tax deductible. You get 53 cents for every mile that you drive for business in your car. So you need to keep track of your miles. If you get in the car and you drive to the post office to ship something, that's tax deductible. You add that onto your miles. If you are driving out of town to go to a training, that's tax deductible. So keep track of your miles. I know that there are apps that you can get on your phone that kind of track where you are and where you go in your miles, and then it will pop up and say, I noticed you drove 12 miles to Walmart. Is this for business? And then you can say yes or no, but I can't remember the name of that app. So maybe I'll have to find that and then post that in the comments. Because I know there's an app that tracks it for you. But I don't use the app, which is why I don't know the name of it. I just track the miles. Like, I know it's 1.8 miles to the post office and back. So every time I go to the post office, I just put in my spreadsheet that I have my giveaways and my inventory and my miles in. I just get on and say, okay, I went to the post office today, and I add 1.8 miles on to my spreadsheet for that. Any travel expenses. If you are traveling for work, if you're going to an event, if you're going to a training, any plane tickets that you buy, any hotel, any food, anything that you spend traveling to and from that event is a tax deductible expense. Education expenses. So if you're going to an event or training, like seminar, I think it's like $200 or $250 for a ticket to seminar. And that's a tax deductible expense, that ticket to get in. If you take a class at a community college that is going to benefit you in your business, that's a tax deductible expense. Any charitable contributions that your business does is tax deductible. I know a lot of ladies in the business, because SeneGence has a charity called the Make Sense Foundation, which helps women and children. And I know a lot of ladies take a portion of their check, whether it's at the end of the year or monthly, they take a portion of that check and they donate it to the Make Sense Foundation. And if you do that, that's a tax deductible expense. If you do it to a church, if you do it for breast cancer or muscular dystrophy, or whatever it is that you donate to, keep track of that, and that could be tax deductible for you. So that's just like a little bit, like that just is like this much of what is actually could be tax deductible for you and your family because you have this business, which is why when I get questions when ladies start or when they're thinking about starting and they're like, so what about taxes? I say, don't stress about it, because you honestly save so much with the things you can take out for tax deductions. It's not a huge thing. But if you take, as far as taxes go, they take what you make, so they take your sales revenue plus your downline commission, and they subtract your expenses from that, so all those tax deductions, and whatever is left, that's what they tax you on. This is where it starts to get a little tricky, a little more stressful. But this part you do not need to worry about. I'm going to say this 20 times before I end this video. You do not need to worry about this unless you have started making an increase in your business. And all that means is that you are making more than you are spending for your business. Right now, we're not in that place, because when I started my business, we were in a super deep, nitty-gritty, out-of-stock situation, and so I had to buy stock to start our company, and I had to put it all on the credit card. And we're still working on paying that off. So we're not to a place yet where our increase, where we've reached an increase. But for most of you, you'll be starting out where you're doing a launch party and you're getting money to start your business. So you're not putting anything, you're not putting as much up to invest in your business in the beginning. So it's going to be a little bit different for you, and probably a lot faster for you before you start making an increase in your business. But if you want to do these things when you very first start out and just have it, then that's great. There's nothing wrong with it. If you don't want to have to worry about it later, then go ahead. But if you, I mean, for me, when I was starting my business, I was just trying to figure out what I was doing in starting a business. And I didn't even learn about most of this stuff until probably a month ago. And that's okay. So if it's not something you're worried about right now in starting your business, then don't worry about it. And just, have it in the back of your brain. And then when you start making an increase, then make this a priority. Okay, so the very first thing you will need to do once you start making an increase in your business is hire an accountant. Your accountant will be worth their weight in gold. When you get to this place in your business, you can go to an accountant, you can sit down, you can tell them exactly what you want, and they will help you through the entire process and even do most of the work. So you don't have to worry about it or stress about it. But because you own your own business now, you will get charged what's called a self-employed tax, which means they charge you an additional 15.3% tax on top of your regular tax bracket. So after they take all those, they take your total profit, which was your sales revenue minus your expenses, your total profit that's left over. When they take that, they'll put it in a tax bracket, and whatever you would get charged for that, they would add an additional 15.3% tax rate onto your income. And there's often some double taxing that happens. So what I'm going to tell you about right now is how to avoid that. How we don't get charged 15.3% taxes and avoid all those double taxes. This is how you want to avoid that. So once again, once you start making an increase, And sometimes it's a substantial increase and sometimes it's not. Just know that the increase that you're making, they're going to charge you that tax bracket with the 15.3% up until you do these things. But that's why I say just not till you're making an increase, because everything before that is just kind of a wash. So you will need to set up an LLC with an S corporation. It sounds complicated, but it's not. Okay, let me explain it to you. Don't get too stressed out. Don't get too overwhelmed yet. It's going to be okay. An LLC will do a lot of things for your business. It will enhance your credibility. You do not have to have residency. There's no residency required to get an LLC. And it's different. The requirements for an LLC are different for every state, which is so many parts of what I'm about to tell you differ by state, which is why I told you to get an accountant. If you are ready to do this in your business, you will need an accountant to help you because it's different everywhere. But getting an LLC means that your company becomes its own legal entity. It's its own thing. So if anything bad was to ever happen, it protects you, it protects your family, it protects your home, your car, anything not connected to your business is safe. So it's a big benefit there where if you were to ever get sued, which I don't see happening in this business, but kind of like a better safe than sorry thing, if you were to ever get sued, they could never come after you personally or your family or your home if you have an LLC attached to your company. It becomes its own thing. So they can sue your company and drain your company's resources, but they will not be able to touch you or your family or your home or your car or any of those things that are really, really important to us. So it's really good for that. And it also gives you the perk of what's called pass-through taxes, which helps you to avoid the double tax. The LLC helps to avoid the double tax, but you still get charged 15.3% if you only have an LLC. But if you are to a place where you are ready to set up an LLC, the very first thing you do is you go and you talk to your accountant because they will be able to help you through this whole thing. You will have to get on and do like a business search and make sure that your business name isn't taken by anybody else. And then you would put your business name in for the LLC, which is part of the reason when we were doing the new distributor video, I was talking to you about making sure that your business name is unique and it's creative and it's just yours. It belongs to just you. And that's not only just so you can have a passion for your business and what it is, but also because when it comes to getting to the point where you're going to want an LLC, there's not going to be anyone else that has that business name. So that's a really good thing about when you're choosing your business name. You just want to make sure that it's unique to you. But they'll do a business search and make sure that business name isn't taken by anybody else. And then you will have to do what's called filing an articles of organization. You have to pay a filing fee. You have to write up a statement of purpose. And all of this sounds really complicated, but it's not. And your accountant would help you through the entire process to make sure it's exactly what it needs to be. But you would need to do all those things. And depending on the state you're in, you might have to apply for a business license. But that's never, it's like $15 to $25 depending on where you live. It's not very expensive. And it just is a cute little thing you can hang up in your office if you want. But depending on the state you're in, you might have to apply for a business license. And then you take all of those things that you've collected and done and you send them to the IRS and you apply to get an employer ID number for your business, which is essentially a social security number for your company, which is why it's its own separate entity. So instead of coming after you and your social security number, they're going after your business and your business's employer ID number, which I think is called an EIN, I think is what they call it for short. And it'll take a little while, probably like a week, I think it takes for the IRS to assign you a number, maybe less than that. And then you will take that EIN that you just got from the IRS and all those things, and a copy of all those things you sent to the IRS to get your employee ID number, and you will take it to a bank. Research which bank is best for you and best for your business, best for your company, best for your family. Go into the bank and open a business checking and savings account under your LLC, under your business name. You will want that because once your business has an LLC and it's its own entity, it will need to have its own business and checking account. Because anything that has to do with that business now needs to be in the business name. And it cannot go into a personal checking account under your name. Which is why you would need to then call corporate, call SeneCare, tell them that you just set your business up under an LLC, and they will help you to change your information so that your commission checks are then written out to your company and not to you. If it still continues to be written out to you, then it would have to go in your personal account, and then you'd have to transfer into your business account, and it would be a whole mess. In order for it to go into your business checking account, it has to be in your business name. So that's something that you would have to change after you have an LLC set up for your company. And that would also be a really good time to apply for a credit card. That's completely optional, but you might want to apply for a business credit card. And all that does is protect your family's credit. So if, and then I mean, it also gives you like miles and cash back and like those perks that you get from a credit card. But if you have $200 in your checking account and you need to book hotels and flights and all those things to go to seminar or to go to a training, and that's going to cost $300, then you have a business credit card that is for your business, and you will just have that to put those things on instead of having to worry about putting it on a family credit card and messing with all of that. It protects your family credit so that your business expenses belong to just the business. But if you don't want to have a business credit card, don't have a business credit card. It's just entirely up to you. I don't think it's a terrible thing to have, but it's your business and it's your plan. So you just have to decide for you. After you've done all those things, go back to your accountant or just talk to your accountant straight out the gate and figure out what you need to do in your state to keep your LLC compliant. Some states require quarterly reports. Some states just require like a yearly report or whatever it is. But you have to talk to your accountant and find out what it is in your state to keep your LLC compliant. Okay, so that's the LLC. That's what will make your business its own entity to protect you and your family and get rid of the double taxation for your business. Now, if you want to get rid of the 15.3% additional tax on your business, you have to talk to your accountant about doing an LLC with what's called an S corporation. An S corporation, you have to be a citizen of the United States to get an S corporation, but that S corporation is what's going to relieve you of that 15.3% additional tax. And in order to have an S corp, all you have to do is have a payroll for your business, and you only have to have one person on that payroll, and that person is you. Easy, huh? And the only thing that you have to do is that when you get your commission check from the company, or whenever you're getting ready to pay yourself commission from your sales revenue, you call your accountant, you call him and say, okay, this is what I paid myself this month, and he takes a note of it, and then you are staying compliant with your S corp. All you have to do is have a payroll with one person on it, and then you get rid of that 15.3% tax. Isn't that amazing? I'm like so excited about it that it just seems so easy that you don't even have to really do any extra work. It's just something that your accountant can file to get added on to your LLC, and then you save a bunch of pennies, like a bunch of money by doing that. You would also need to talk to your accountant because some states don't actually recognize S corporations. And you don't want to file with your accountant for an S corporation and then realize that your state doesn't recognize S corporations. And then they will charge you as what's called a C corp, which is like a big company like Walmart or Target. And then you will end up paying a lot more money than what you were thinking. So just make sure that when you go to talk to your accountant about getting an LLC with an S corporation, that your state recognizes S corporations. And they should know whether or not that is something that will happen. Now, just a note here, just a tip. When you start getting commission checks from the company, hold on, let me back up. When you start getting an increase in your company, I would very, very strongly encourage you to break down your check. Okay? Whether it's from your sales revenue or from your downline commission that you get from the company, break it down. Put 30% aside into a savings account to pay any taxes that you might need to, and do it right when you get paid that money, so that you don't have to stress come tax time where you're going to get all this money from or how you're going to set up a payment plan with the IRS to pay that kind of money. You will just have it in a savings account for your business. And if you save 30%, that's probably more than you will ever need, especially with all the tax deductions. And if you do the LLC with the S Corp, you probably won't need ever to pay more than 30% of what you made. So if you put 30%, you're more than covered for that. So I would put 30% into a savings account for taxes, pay yourself and your family 30% commission, and do 40% into your business checking account to use as business expenses, to buy a product, to buy business cards, to buy supplies or furniture or whatever it is for your company that you need. You would use that 40% for that. And that way you've got money aside for your taxes, so you aren't worrying about it. You're not stressed. You're still getting commission for your family. And then so you're doing that payroll, right? For that S corporation, you're giving yourself 30% of whatever you make, and then that 40% is going into your business to keep your business running and your stock where it needs to be and all of that. Now, after you've set up an LLC with the S corporation, you need to make sure that any business documents you sign with your business name. So like for me, if I go to sign a document for my business, I write everything is Rosy Cosmetics. I do not sign my name, because if you sign your name, you are then the one responsible for that contract or for that paper. It's you, and it's your social security number instead of your business. And your business is EIN, which is what you don't want. So after you've set up an LLC with an S Corp, you need to make sure that everything you sign that is for your business, you sign with your business name. And you also, just a tip, keep your records for your business, your receipts, your monthly, your sales revenue, your checks you get from the company. Keep that for 7 years. Because sometimes it'll take the IRS 2 or 3 years, and then they'll think, oh wow, maybe we didn't do this right, and then they'll audit you from 3 years ago. So just keep your records for 7 years. Just get a file box or whatever it might be, and just keep it tucked away in your closet so that you have it, and then just add on to it for 7 years, and that on your 8th year that you're doing this business, you can go through and shred everything from your first year. You only need to keep 7 years worth of stuff. If it's anything, I mean, if they were trying to come out after you for 8 or 9 years ago, I don't think that they would even try, because I don't think they expect people to have records after 7 years. But that's the cutoff, is try to keep everything for 7 years. I've said that so many times now, I don't even know what to say. Okay, so that was everything that I wanted to cover. So let me just say this now, okay? I know that this feels overwhelming. I know that this is probably a little scary when you get into this stuff. It starts to get real, and it's not always fun. But like I said so many times in this video, do not stress about getting an LLC with an S corporation until you are making an increase. Do not let this scare you away from this company and from this opportunity and all the things that this company can do for you and for your family. While you're starting out your business, I feel like it's much more important that you are focusing on keeping track of your expenses and your sales and being organized, because being organized is going to be the best thing for both your business and for taxes when that time comes. So just stay on top of this stuff. If you have any questions about how I do that, how I keep organized, I'm more than willing to answer those for you. Say 7 years. Yeah. I am always here for you for whatever you need. If you have any questions about how I do it, I'm more than willing to help you with that. The only reason I talk about having an LLC with the S Corporation is because you have joined this company at an amazing time. And there is a very, very, very good chance that this time next year, you are going to be making a lot of money. And if you start this business and you didn't know about an LLC with an S corporation, and you start zooming through this year and making loads of money, when the time comes, you are just, it will save you so much money when you get to that time. If I can just tell you. But for right now, just train yourself, be educated, and do the best you can with your business. But do not stress about this until you start making an increase. Right now, focus on your business, focus on being organized, and educating yourself on what you need to do for your business and getting it started, and then go from there. Okay? Do you guys have any questions? I'm asking if you have any questions about all this. This is a lot of information. And I will answer your questions the very best I can. But like I said at the beginning, I'm not an accountant. So I only know what I know. And it is so different for every state. So I will do the best I can to answer your questions if you have any. But I'm not a genius when it comes to this stuff, you guys. I just have done a lot of my own research, and I've watched videos from other ladies and just educated myself on taxes and what's happening. So right, Chelsea? That's why can you come live with me and keep me organized? Yes, Janelle, I would love to. I'll be there tomorrow. Yes, that list of deductions is amazing. And that's why, like when you sent me that message about what's this going to do to my taxes, I was like, don't stress about it. Don't even worry, because those deductions make a world of difference when it comes to all of this. And I will, either today or tomorrow, I'll sit down and type up the whole list I have, because that was barely like skimming the surface. I will type up the whole list I have, and I'll put it on our group page. But anyway, that's all, ladies. It's not so bad. It's not as scary as it feels. I promise you. It's going to be okay, and it will all be worth it. Especially when you are making loads of money and your family yeah. Well, now you can tell him. Not much, right? Yeah, so, I mean, next year, like I said, you guys, in a year from now, there is a very, very real and high chance that you are going to be making a lot of money. And so do not let this scare you. Just be educated. Okay? Are we good? Are we happy?
I told him to get back to his home.
Okay. Sorry, I've got a Lego emergency. So, we're fixing that. Anyway, thank you ladies for watching this whole video. I hope it helps. I hope it's educational enough that you are feeling prepared for the world. If anything else comes up, if you have any more questions about it, please let me know, and I will do the best I can to help you. And I will talk to you soon, and definitely see you next Monday. Okay, bye ladies. I love you.